I think one of the easiest way to lose money or not make money in the markets, or at least get frustrated, is by trading and force yourself to trade these very choppy markets. We have one of these markets right now, or have had at least for the past few days. And usually these are markets where maybe market participants are out, or it's a very headline-driven market, whether it's a current, like a geopolitical thing going on, or even a monetary policy thing, which is happening right now. But when you have a market like that, I know it's difficult for a lot of people not to trade it because they always think there's going to be a move, but it's usually best to take a step back because ultimately you will get a move that becomes easier to trade. So let me quickly show you what this looks like right now. So like right now, if you look at our very simple chart of the S&P 500, I'm looking at the SPY ETF here. You can see, and I'm going to extend this over to the right a little bit so maybe you can see the levels. Let me bring this over like this. You can see that we essentially have a range here around 295 on the upper end, on the lower end 100, about 283 or so is roughly what the range is. And it's very choppy. Obviously, as you can see, we had a first leg lower and now we're chopping back and forth. And I actually ultimately, for what it's worth, I do think we will head lower ultimately and retest these levels. But for right now, this has been very frustrating. And so it's very, very simple to try to think that we're going to break out when you're at the top of the range or break down when you're at the bottom of the range. The reality is it remains a range until you actually break out. So one of the things that I think, kind of, and let us know in the commentary section down below that if that kind of applies to you. One of the things that people will say is that, well, if I don't position myself now, then it'll be too late when the move actually does happen. And that, for the most part, just isn't true, because when you do have a move that actually lasts, you can be quite agile. Most people can be agile enough to get in, even if you get a first reaction, out of the range already. So just, what I think helps to understand is that greed and fear are your enemies as a trader and investor. And so if you let greed overcome that by trying to front run a move, particularly if it's headline news driven and you don't know what the headline is, or you don't know what the reaction to the headline news will be, then that's just not a very good way to try to make money in the market. So right now, we're actually taking a step back from the market. Here we have the Jackson Hole Central Banking Symposium coming up this week. This is the middle of August, getting into the second half of August 2019. And then, depending on what the market does and which direction it may go, we will then see if we can kind of jump on that and kind of play it that way. But again, taking a step aside is very similar to like if you are looking to trade an equity, like an individual stock. Usually from a trading perspective, it's best to step aside through an earnings report or through any major event around that stock, as opposed to trying to gamble on a potential outcome. Because not only do you not know what the outcome will be in terms of what the news might be, you also, more importantly, you don't know what the news, how people will react to the news. And the news will always be more, or the reaction to the news is always more important than the news itself when it comes to trading and investing. Hope it helps, folks. Talk to you soon.